Awesome. So for the silver bullet, before we go any further, I'm going to give you kind of like training wheels. This will be a good uh basic way to look for it and have some help. So right here, there's going to be this indicator. So if you go to indicators up here and type in ICT silver bullet, it's made by Lux Algo. They actually have, right, this is an indicator. They actually have an indicator that marks out all the times right here. So you can see there's one at 3 to 4 a.m. There's one between 10 and 11 a.m. Then there's one between 2 and 3 p.m. It even marks out the gaps for you. So this is going to be kind of our go-to. So like for this one, right now we're just going to mark out the 10 o'clock time and the 11 o'clock time. We don't necessarily want to use the indicator right this second. Cool. And so another thing is we're going to be going over fair value gaps. So if you are unfamiliar with fair value gaps, go to the free course that we have here on the Division One Trading YouTube and just go to playlists, go right here to free Forex course, and it should be in, where's the playlist? There it is. So right here, if you go to section 1 is just the basics on the market. But as you go here, you can see different things. Like, so right here, 2.05 is the fair value gap. And then you can go into that and figure out, exactly how it works and how we identify them and how we look at them. And we go through some examples as well. Cool. So I wanted to talk about this one today. I obviously didn't know it was going to be here when I planned doing this silver bullet setup review, but ended up being a perfect day for us to cover it. So step one is we first have to identify 10 o'clock and 11 o'clock New York time. So right here, you can see we've got a vertical line at 10 and a vertical line at 11. Now you have to set your time zone to New York time. That way you know that you're using the right time. Another little tip on the silver bullet indicator is just make sure that these are turned up as far as the percentage on them. That way you can see them real good. So once we have this time marked out, right? So after 10 o'clock New York time, you're going to start looking for a fair value gap on a 5-minute chart, specifically a 5-minute chart. You can look on a 1 minute and 3 minute, but you're going to get a lot of signals. 5-minute is going to be your most basic and easiest setup. So right here, we form a fair value gap between 10 and 11 o'clock. So we see that fair value gap right there. That's a bearish fair value gap. Again, if you're not familiar with fair value gaps, go check them out on the free course. So once we created this bearish fair value gap, we know that we can start looking for shorts. Now, you can go down to the 1 minute after you've identified your 5-minute fair value gap. Now, the basic way of looking at it is just you can either sell at the low, 50%, or the high. So, and they all come with their own unique setup. So say that we went short here, and we'll talk about stop placement in a minute. If you went short here, you're obviously going to have a larger stop. Say that we're just using that previous high on the swing, right? You're going to have a larger stop. So if we just took out the previous low, we're not even at a 1-to-1. So if you are going to take this silver bullet and this was going to be your take profit and this was going to be your stop, this would not be a great area to enter. I would say you need to look for at least 2-to-1 on these setups if you're going to take them. So secondary entry would be right here, that 50%. So we still can't get a 2-to-1 out of that either. So it's really not a great setup. Either that or, we'd have to reconsider our stop. So same thing, once we pull up here, we get a little bit closer, 1.69, but not quite 2 to 1. So we know that something has to change, right? And we don't just want to drag our TP down. Obviously, our stop is probably not in that favorable of a position, right? So in this example, and we can cover this on all of them, let's say that we're entering at the top of the silver bullet. And sorry, those because of Zion. So say that we're entering at the top of this silver bullet, right? Where would be a good area for our stop? Well, we would measure this here, this swing, right? And optimal trade entry, which is a typical way to enter, would be at 62%. So that brings us right there to the top of that silver bullet. So this probably isn't that bad of an area to enter. Now, I'm gonna go back out here to our 5 minute. Oh, it brought me to the previous day. So where would be a pretty good level? Well, the first thing that I look at is, where are we in the charts? So like right here, we have the benefit, the high of the day is right here, right? So this level here, this order block, it broke down and then returned. So I'm looking at not just this order block, but we can look at the principles of it. 50%, right? So that is something that we want to pay attention to. 50% of this order block. We know that that can hold price. So price trades up. Whoops. Not only into the order block, but also right here into the silver bullet. So if we had to go short on this setup, the best case scenario would be going short here with your stop right above 50% of that order block. And then your take profit would be below here. Now look, you're looking at a 4 to 1. So with that scenario, if we're using 50% of that order block, we can't enter here. Why? Because it's only a 1.39 to 1. What do we need as a minimum? At least 2, right? So right here, 50%, could we enter there? Yes, because we're at 2 to 1 at least. Now, what about here? Of course, we could enter there because it's even higher. Now, on this setup right here, if you're using that 50%, you're going to get taken out. Maybe if you'd have been just a bit higher, but you'd have had to get lucky to have that happen. So right here, once you're taken out, this is a setup that sometimes you're gonna have to pull it twice. It's a scalp, right? And it should be fast. You shouldn't have to hold on to these for hours, right? It should by the 11 o'clock time or shortly after should start moving in your favor. So right here would be a good setup. It would stop you out, and as it goes right here and taps it again, you could take a second entry. I generally won't take more than 3 entries. After 3 entries on this, I'm pretty much done. Now, scaling out, right? So we enter at this level, stop above the 50. Now, if you put your stop up there, you could technically still use this level, but you would have to extend your take profit. So generally, I'll measure a leg right here, and I'll look for a symmetrical swing. Meaning, I'll look for, right, if this is 1 to 1, I'll look for another swing of that. So right here would be our long-term take profit or where we'd like to be completely out of the trade. So this level here, because it's the low, we could take partials there, right? It's not quite 2 to 1. So we'd have to obviously mess with our stop. But as we start going down, right, 25%, 50% extension, 75% extension, full extension, right? Something like this setup here could be pretty beneficial. You can see it's a 4 to 1. Once you get down here past that that old low, you can always bring your stop down as well. And so it's no risk on the trade. You could even trail your stop if you wanted, somewhere around break even and wait for it to hit a solid target. Now, is it going to do that every day? No. That's why you need to take partials and make sure you secure something at 2 to 1. So let's go look at a couple more examples. And like I said, for time's sake, we'll probably just cover this 10 to 11 o'clock time. So right here, we can see right there, 10 o'clock and 11 o'clock. Now I'm kind of using the indicator, so it's kind of cheating. I only see, you could also use volume imbalances, but for right now, let's not. That makes things a lot more complicated. Just stick with fair value gaps. So right here, you can see we have a very small fair value gap. Let me make this a different color. So right there, from this low to this high, we have a fair value gap between 10 and 11. All right. So here's the fair value gap that was formed. And again, it comes in the form of, yes, we have a fair value gap, but I want you to pay attention to the swing that we get here, because that swing is pretty important. Let me see, how do I mute? Okay. So this swing here that the leg the fair value gap is created in between this high and this low is relevant. Again, we talked about that 62% retracement. Look, they pull up 3 candles, fast, sharp movement right there to that 62. Okay, well, now where can we enter? Well, we have a very small silver bullet, but we would know that our entry would need to be somewhere right around in there. So what does that stop look like for us? Well, let's see. If we put it at the high, which is pretty fair, we don't quite get to a 2-to-1. So let's go back to our 5 minute. Is there an order block here that could be used? Yes, right here. We have that benefit of being near the high of day again. So we're going to measure that order block out. And remember, 50% of this can be used as a stop. Now, like we talked about, you're probably going to have to enter more than one time. So if we entered here within our time window, our entry would be right here, just at the top of that silver bullet. Now our stop can be right there above the 50. Now you can see this first one would have got hit out right here, but same thing, as you could take that second setup with your stop above there. Why does it make sense to take 2 or 3 shots at this trade? Right? Because you can get, just based off the first swing, a 5-to-1 potential. Right now, if you just want to enter once, you're going to be a lot safer putting your stop above the order block versus using that 50%. The 50% is going to be for tight stops. Now you're sitting at a 2-to-1. So you could still take this trade. It's fair. You could enter here with your stop above the order block, TP at this old low, right? So again, you would TP at this level. Now you can look down in grades, right? 25%, 50%, 75%, didn't quite get there, and then a full symmetrical swing of the move that created the fair value gap. So that symmetrical swing would be here. So you can see it took a minute, but it did play out to that symmetrical swing level from the silver bullet leg and then runs around, which that ended up being around almost a 7-to-1. Cool. So let's go look at, let's recap real quick. So again, we were looking at this silver bullet gap that was formed here and this order block. We're using the order block for stop levels, and we're using the silver bullet for entry levels. Do you scale out to hit TPs on higher time frames if possible? Yes. We're going to be going over more of that after this when we do our boot camp call with the private students. We're just going to talk about, blending it with your PD arrays and with higher time frame stuff and things like that. But this is kind of like the basics of the setup, right? You got to find a fair value gap and you got to find something to build a stop off of. So let's see. Let's go through one more example. Maybe one that's just a little bit different. I feel like the other two were very similar. Cool. So here we go. Because like I said, it should be like that where it's very, oh, that's 3 or 4 in the morning. It should be like that where it's very it either gives the level and moves fast, or it really just doesn't, and then you don't have to worry about it. Once you take your 2 or 3 entries at it, if it's not working, just let it go. So right here you can see pretty quick, right off the rip, we get a silver bullet here. Now, what's the first thing that you notice about this one? So you can see that it's larger. It's a lot larger than the other ones. So what does that mean? Well, it changes our perspective. If you enter here, your stop is a lot bigger than before, right? You have to use this whole range. Now, if you enter here, right, we can just start adjusting the stop, things like that, right? Now, you want your entry you want your entry to be between these windows. Sometimes, honestly, you will see it happen a little bit before, and sometimes you'll see it happen a little bit after. But as far as this strategy, right, when it gets to over here, you're not taking this setup. Is it still relevant? Yes. Right? Old fair value gap right here, look, being used as classic support and resistance. Trades through, retest 50%, trades bullish, right? So yes, you can still use it, but for the silver bullet setup, you should not. This is a setup where we just look between 10 and 11, and if we don't get an entry here, then we pass, right? So this example here, you can see we got another fair value gap to form here, but what do you see? It's after. When it trades up into that gap, it's already after 11 o'clock. So that's not our setup. We should not go short right there because it's occurring after. Is this fair value gap still relevant? Yes, right? We can draw that out in time. Look, again, classic support and resistance. Classic support and resistance. So are these gaps going to be relevant to price? Yes. That's more what we're going to go over in the private thing, but I just wanted to cover the silver bullet on this one. But you can see this is pretty much exactly um, what we want to look for, but just happened outside of the window. We had some questions. What do you do when you see multiple fair value gaps? Hopefully, we'll be able to cover that. My default is to always look for the highest one, but at the same time, right? My biggest thing is I'm going to measure the swing. Okay, what swing created this fair value gap from this high to this low? Okay, we need to return to hopefully 62%, and then look for a trade in our time window. If it doesn't do that, then we're not looking for it. You might have a gap down here and one up here, but again, I'm applying those same principles. So are there any pairs this strategy works better on? Are there any pairs you shouldn't use on this strategy? Honestly, I couldn't tell you as far as all the strategies, so I don't know as far as that aspect. But so far so good on everything that I've used it on. I know it works on Forex and gold, and here in just a second, we're going to cover one setup on AUD. Someone asked at the beginning of the call to cover a setup on AUD. So here's another question that I get a lot and that I've kind of learned to figure out. So OTE level is 62%. So what if a fair value gap like this one forms, and this answers both questions, right? Because there's multiple. What if it forms right there at the open? Well, that's fine. You could still use it because it formed after 10 o'clock. This candle didn't open to form this fair value gap until 10. So right here, we have another fair value gap. We draw that out. Cool. So this one also has the benefit of being the low of the day. Where is 50% on our order block? 50% would be right here. And instead of wasting any time, I'm just going to put 50% there and just try to visualize that and remember that this is 50% of this order block. Okay, so the 24th or 21st. So let's go down to the 1 minute again there on the 21st. We're going to go to Things all in the way. Sorry, y'all. The 21st. Here we go. So we've drawn it out on the 5 minute. We see that this leg has formed, right? This level of price has formed this fair value gap, right? So this swing here from this low to this high formed this fair value gap. Now, what level are we looking to enter around? 62%. Do we just take it blindly at the 62%? No, right? We're blending that with our silver bullet. So where is going to be the highest probability level that for it to get hit? Right here. So could we run with our stop below 50% of that order block and at the old high? Yes. Why? Because it's at least a 2-to-1. Now, the further we go down on the entry, right? If we enter at 50, we get 3.8-to-1, almost 4-to-1. If we enter down at the low, we start looking at a real snipe, almost a 10-to-1 just based off this. Right. So that, that's the potential with the silver bullet too, is you can really see some nice trades. And it would be the same thing. We want to secure partials here, and then we could aim for a potential full swing. This one did not play out. It ran to our target, took out that high, and then started rolling off, and eventually would have came down and either knocked us out at break even, right? Because after I would say if you go, even a 1-to-1, you should move your stop just a little bit, unless you have an absolute sniper like this and you already have a very small stop. But there's no way you should go up more than 2-to-1 and then take a loss. Definitely not. And yeah, so price did get a little wild and didn't hit that one until the next day. So let's see. What if a setup appears outside the time frame? You don't take it, right? It has to happen in this time frame. Do you let the trade run after time frame concludes or start looking to close? So I'll generally take profit, not based on the time frame. I'm just looking to enter during that time frame, but my exit, sometimes it happens fast like this, right? This was 15 minutes after the 11 o'clock hour close. Other times it does take a little bit longer, like today's setup. Let me get all these out of the way. Today's setup did take a little bit longer to play out. We didn't run this full swing until 1 o'clock. So 2 hours later, right? So sometimes it does take a little bit to run, but we're always entering only within that time frame. So let's go over the AUD pair. And again, so what are your training wheels? This ICT Silver Bullet Lux Algo indicator. So, and today we're just covering, since this is an AUD pair, I'd like to do the 3 to 4 a.m. But just to stick to it, we'll just talk about New York. So I'd be looking at this on a 5-minute chart, and I'd be looking for a fair value gap to form. So I do not see anything significant in here forming. There's some volume imbalances, but that's not really what we're looking for with this. So let's go to the next day, see if we had anything right here between 10 and 11. Right here, remember we talked about this. If you see it form right at the open, that's something we can still measure out. So right here, this fair value gap forms. But what's the problem? We do not trade to it within this hour. Well, let's see, at least this gap. Now, we do have a very small fair value gap formed right here. So if we took this trade, again, we're going to look, where was the swing that formed the fair value gap? And we'll go down to the 1 minute, and this is on the 23rd. So right here, we had this small fair value gap form on the 5 minute. Now, what leg created that? This one here, from this high to this low. We draw that out. What are we looking for? We're looking for a 62% retracement, roughly, with the silver bullet right? We want to see a blending of the two, and then we can work our stop based on this swing, right? We'd like to use the order block on the 5 minute if we can. So like right here, the silver bullet, we can't enter here because we have to wait for at least the 50 minimum, right? And kind of cherry picking, but I would just put your entry right there at the 62. If your silver bullet is below there and you measure this swing out, so your take profit would be there, that's 1.75. So you'd need it just a bit lower, something like that. And you could even blend in an order block right there. So right here, just a quick 2-to-1, and then you can, look at your grades, 25%, 50%, 75, and one full swing. This one obviously only went to a 0.5 swing and then ran out. Sorry, it's not letting me put it on that tick. But this could have been a silver bullet entry. So just to cover it again, right there would be our silver bullet gap. And then right here could be our bearish order block. I'm actually just going to use the bodies. So if we were using this as our bearish order block, and this is the 23rd. And just to recap, right, I would say just use this on the 5 minute. I wouldn't go down to the 3 and look for gaps, or go to the 1 and look for gaps. You can go down in a time frame once you have, found all the levels that you're looking for, just to trade them that way. So here's our order block, right? This is our bearish order block on the 5 minute. So if we go short here at the 62, based on this silver bullet, our TP's here and our stop can go right above 50%. It's really not letting me, but right above 50% of that order block. So right here, this setup should give us about a 3-to-1 with a full potential of about 6-to-1. And that's just in a very small setup. Now, again, you have to stick to those rules. And just another little bonus tip that I'm going to throw in there. These fair value gaps remain important. It doesn't mean that there's always going to be a setup off of them or the way that you want to see it, but I want you to see the relevance of these silver bullet gaps, right? Not just this one there, look at that, but this one here. They run into it and then turn around. So there's a lot of power in these gaps, right? And this is AUD, this is Australian dollar. So it works, on everything. So right here you can see 10 to 11. They've already got it marked here on the indicator. From this candle to this candle, we had a silver bullet. So let's talk about that. And we'll take some more questions and be done for the night. So right there on the 22nd, let's check out the 22nd. And okay, we're a little further. There we are. So here is our 5 minute. What am I doing? Let me go ahead and stick to the 22nd, but I also want to go ahead and mark out our order block. So let's see which one has the higher close. 65, 625, 65, 625. So they're both the same, but this one wicked higher. So I'll just go ahead and use this one. So this is the prominent order block right there in that setup. Again, where would a good stop be? Right there, about 50%. So let's go down to the 22nd again. Here we are. So the blue box is our bearish order block, and the red box is our silver bullet gap. So again, we're going to measure from the swing high to the swing low. Now, I would be wanting to use this swing because this is the leg that created the fair value gap itself. So we trade it down. Now on this one, we did not get to 62. We just got to the low of that silver bullet. So if I just had to set a limit on this one, I'd be looking at something like this, entering at the high of the silver bullet with my stop right above the order block, and then my TP at that old low. And this one for me would just end up being a miss. Now, if you're comfortable with taking the silver bullet, you could take it right there. You would have had to, or you would have missed it. Your stop can be right above 50% of that order block. And again, your TP would have to go here. So this is one that you'd probably just end up missing or not taking. What's up, Daniel? This is just, it just doesn't meet your risk reward requirement. Now, you could adjust your stop if you really just wanted to take a setup. You could set it at right above the 50 of the silver bullet, but you know that there's a good chance of that getting hit. And so it's really keeping that stop just a little bit too small for to give price any real room to breathe. You just didn't have much of an extension here, and you didn't have much of a pullback. So this would be obviously the best case scenario like setup as far as cherry picking it. But if I just had to say what setup would I have taken, like I said, I'd have been looking for the high of that silver bullet, stop above the order block, and TP back down there at the 0. So again, will this gap hold relevance in price? Yes, right? They cleared it right there, and then they come back to it, manipulate a little bit. But we talked about how they can, use these silver bullet gaps to create our classic support and resistance moves. And again, right here, look at the bodies. Look at the relevance to the silver bullet gap. They wick down here on the 5 minute, but look, they can't even close below the 50. Yeah, exactly. You'd have to take that a few different times with that stop loss that tight. Do you try and hold the silver bullet setup to higher day or low of the day? No, not necessarily. Like I said, my two main frames for it are I'm looking for it to run that low here. And then I'm looking at these grades, kind of just watching price. But my ultimate goal is try to see a full swing. Now again, and you can kind of build on this, right? Um, but they end up using them a lot of the time. I don't think there's been one yet that hasn't where they use them like classic support and resistance, right? So you can see hits it here, runs, comes back, right? We get our classic what we call it D1 retail death trap right here, right? Where it's divergent, but there's still reasons for it to want to go higher. So once it gets here and starts trading bullish, we can capitalize on that and look for the short liquidity that's up there. Let's see. So if you see the setup of the silver bullet on the 1 minute, are you supposed to take the entry there or drop to the 30 second? No, like I was saying, I just on the 5 minute is where you identify the setup. I would not identify gaps on the 1 minute or the 3 minute. Sometimes it can help, but just in my experience, it's been more harmful than it is helpful. Because there's a silver bullet, if not every day, I would say at least every other day. Across the three time windows that the silver bullet has, I would say that there's a setup every single day, but not always in the one time frame that or one or two time frames that you're going to trade. Now, if you go to the 1 minute, yeah, there's going to be a setup every day, but that setup isn't necessarily going to be um, that strong, right? The lower the time frame you go, the more signals you get, but the less accurate they're going to be. Yeah, exactly. Like I already said, it's just going to be a lot of noise. Do I trade the silver bullet? Yeah. So every morning when we get on our live calls, that's one of the first things that we're looking for is that silver bullet setup. And that's what we take a lot of times. So like today, I know I already covered it, but today's silver bullet was very, very easy. Ended up kind of working myself out of the trade, just trying to do too much. Should have just been more calm and just traded it on the 5 minute. But easy setup right there. Silver bullet, fair value gap formed, measured it out, comes back 62, just plus a little bit, run into that volume imbalance, and then sinks lower. Not just a 50% grade, which is what we generally would feel is like the sweet spot for taking profit, but ended up giving a full grade and then even some more like 1.75. Do you still trade outside these time frames still? Um, I'm not exactly sure what the question is, but I would just assume that you're asking, do you use other time frames to as confluence? I would say not for this setup. Honestly, like that's the higher level way to look at it is like Okay, so say you see this silver bullet, right? We know that this was Monday. Okay, well, we can look at the previous week and say, okay, in relationship to the previous week, what's likely to happen? We had this large bullish reversal that happened on Tuesday, ending with a high here. And so a good scenario or a good thing to expect would be, hey, if we try to trade up above this high and fail and break down, it's probably a good chance to see more shorts a lot faster. And you can see we kind of had this little double bottom right here from the previous day. And so you can, that's how I use the higher time frame as confluence. We have double bottom there. Okay, I know I could aim for that. And it, trades down and smokes it pretty good. Oh, outside 10 to 11? No. No, I'll leave it alone. After that, I'm moving on to other strategies that I use. Do you jump to another strategy if you don't see any silver bullet, or do you stick to this one? So I do have a couple that are kind of like my go-tos. Now, the only problem that I run into with that is if I have another system that is conflicting with my silver bullet system. To be dead honest with you, the silver bullet usually will override my other systems. So for me, the silver bullet kind of takes precedence. And anytime I haven't given it precedence, obviously not every time, but most of the time, I'll get burned. Exactly. Yeah. You only look between 10 to 11 and then you don't take it. Awesome. So, does anyone have any last minute questions before we go ahead and end this? I ran about 10 minutes longer than I should have. And again, so if you have trouble, finding these order blocks or finding these fair value gaps, make sure you go to the free course. Just go to Division One Trading on YouTube. And if you click on, let me just do it again, right there, the playlist. You go to the playlist, you go to the free Forex course, it'll show you a fancy ad. And then right here, the everything that says 1 point something, that's me just talking about the market in general, right? And I'm just talking about more so like basics and going through examples and how I view the market. When you get to the 2.0s, like 2.01, blah, 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 that's all of like market setup. So this one I just covered a breaker, order block, and fair value gap setup. And so I taught all the principles to that, taught that setup, and your three main entries, three main exits as far as stops. Pretty much exactly the same way that I taught you the silver bullet, right? We do the three main entries, which are going to be the low of the silver bullet, 50% of the silver bullet, or the high of the silver bullet. You learned tonight that my favorite entry is here at the high. And you also learned our three stops. You could either use the stop as a silver bullet, you could use 50% of an order block or the high of the order block. And the main thing that you're looking for is you have to get at least a 2 to 1 for the setup to make sense. And you don't, right? For the setup to make sense, you don't want to just be, okay, well, my stop's up here. So I got to get a 2 to 1. That means my TP should be at least here, right? No, your TP has to be set at that low. And then you build a 2 to 1 off of that. Okay, so you have to get at least a 2 to 1 here, and you want to make it on a logical level. So could we use the high of this order block? No, we're at a 1.5. Could we use 50% of this order block? Yes, we're at a 3 point something, right? And again, may take two entries, sometimes three, and make sure to stick to that bias. Yeah, so the coupon code for the live calls, yeah, it's just live. It's all caps. Um, but just if you have any questions, just message me. And I'll kind of help you and send you the code and all that. But all right, does anyone have any last minute questions before we move on? Hope everyone learned something tonight. Where can we find your fib settings? So my fib settings are very simple. I have a ton of them that sometimes I turn on and off. But to break down my fib style is just like it's a ruler, right? That's how I look at it. So I just grade everything. Okay. So like if you looked at a ruler and you said, okay, this is 0, this is 1, right? 50% of that 0.5 would be here. Where would 25% of that be? Here. Where would 75% of that be? Here. And then you've got the optimal trade entry there. And again, the grades, it's the same thing, 0 to 1 right there. It's just on the negative side of the ruler, right? So 20 or 50% would be here. 75%, it's just negative 0.75, negative 0.25 right there. And that's how I do my fibs for my grading. So like right here, you could see it's just -1 is 0, 0.25, 0.5, 0.75. And then we have, they're kind of scattered now, but negative 0.25, negative 0.5, negative 0.75, and then -1. Yep, I think that will about do it. Like I said, anyone, any last minute questions? What platform do you trade? Futures on Trade of 8. That is who I'd recommend. It's just very, very simple. And you can use TradingView, which is great. Any bias for YM? I honestly couldn't say. Um, I like how they took this liquidity early. I would expect them to want to consolidate. I'd be interested to see if this low gets taken out or protected. I'd I'd like to kind of think this would give us a good understanding of what the week might look like. As you guys know, I'm big on weekly profile and I'm big on Monday making the higher low of the week. Monday makes the higher low of the week in US 30 about 50% of the time, 45 to 50% of the time. So that's what I'd be looking at right now.
Is that the same for Nas?
As far as the as far as
Mon-
what?
Monday making a higher low.
I couldn't tell you for sure as far as the data, but I would assume so. Yeah.
Okay.
But I'd have to go and look at like the full data each week, which I've only done it on US 30 because it freaking takes forever. But all right, y'all. Solid call. I really appreciate you guys having questions and bringing questions more than anything because that just makes the discussion so much easier. Um, and it keeps things rolling real smooth. So I appreciate you guys bringing your questions. Like I said, hopefully you were able to learn something tonight, and this was recorded, so I'll probably post it on YouTube sometime tomorrow. I'm about to go leave the house here in just a minute. But let's do this more, man. And if you guys have any topics that you want me to cover, just post them in the Telegram groups. I love helping you guys out and would love to keep doing them as long as people want me to do them, as long as I can bring value to you that way. But I don't always know what you need me to cover. It's kind of like sometimes I feel like how my math teacher probably felt in college, where it's like, it you get to a certain level where you start to forget some of the basics and they become more like automatic, right? And so sometimes I skip over that stuff, and I don't know exactly what you guys need all the time as far as what you're thinking and what strategies you might be interested in. But I'm getting a little bit long-winded. Appreciate you guys being on the call. See you soon. Peace.